Hello and welcome to Forex Academy, your number one website for Forex and crypto education and analysis. In today's edition, we're going to be discussing fundamental analysis for novices, mortgage approvals. Thank you for joining this Forex Academy educational video for novices. In this series, we will be looking at economic data releases by governments around the world, but specifically focusing on Western democracies, and whereby this data acts as a barometer of health of a country's economy. In this session, we will be looking at mortgage approvals and focusing specifically on the United Kingdom. If you are new to trading, one of the main reasons that new traders fail is because they are unaware of economic data releases, where government release information in the form of statistics, which market analysts and traders use to value the health of a country's economy. Such data causes various levels of impact on the financial markets, which is typically low, medium, or high, where high-impact data can cause currency pairs' exchange rates to stop in its tracks and reverse, which is often detrimental to a trend and therefore may cause losses. By using an economic calendar, which is offered by most brokers, you will learn to use the data releases to your advantage and know where to trade and when to avoid the markets, especially at such times of high-impact data releases. The critical components of an economic calendar are the time of the release, the type of event, the day and date, the likely impact that such data will have on the market, which is measured in three values, low, medium, and high. The actual data, which will be populated onto the calendar very shortly after the data release, and which is typically subject to an embargo. The consensus, which is a value of the expected data release as put together by economists and analysts, and is usually fairly accurate. The previous data release, which should also be used in conjunction with the consensus as a gauge, is also available. The larger the deviation between the actual release and that of the consensus will likely cause more volatility in the market, dependent on expected impact level. Here we see that on Tuesday the 1st of September 2020 at 9:30 a.m. BST, Great Britain will release the data statistics for mortgage approvals for July, where the impact level is low, and where the consensus level is 33.9k, and where the information that was released for June came in at 40.01k. The data will be simultaneously released within the market manufacturing PMI, net lending to individuals, and consumer credit, plus M4 money supply. Therefore, this information will be looked at holistically by traders, and because the manufacturing PMI is a medium impact, potentially there is room for greater volatility than just the information pertaining to mortgage approvals. Mortgage approval statistics is released by the Bank of England each month and shows the number of mortgages which have been approved for July. This acts as a leading indicator for the housing market with the United Kingdom. Higher mortgage approvals mean that the economy is healthier and recovering from the pandemic. The higher the reading, the more positive for the pound, while a low reading is negative and shows that people are not confident with the economy and therefore not buying homes. As such, this is bad for the pound and could see a weakening against the other currencies. As mentioned, we always look at the basket of data releases rather than one single component. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.